We're going to do a brief video here today on Snap Stock, Snapchat, and we're looking at a one-day chart here with moving averages. We've got three moving averages on here. The green one's hard to see, that's the 5-day. The red one is a 20-day, and the blue one is a 200-day moving average. And again, this is a daily chart of Snap. Let's take a look here real quick at this Snap chart. And we'll take a look and see what's going on. If we go all the way back where it first crossed the 200-day moving average, we're looking at the May 2020 area, and we can see that this stock has gradually expanded its volatility as it's gone up. Down here we were at a range of, in May of 20, we were at a range of close to what, around 20 bucks, and as it got up over 50, we could see that its volatility expanded greatly. And in general, it respected the 20-day moving average as it traded above the 200-day moving average. So we have a stock that's behaving pretty normally with the exception of these gaps. These are huge gaps that you don't normally see in a stock that has great volume, and I wouldn't say it's a bad sign or a good sign. I would say it's an indicative sign of a market that's not trading properly. So we'll get back to the gaps in a minute, but you can see them here and here. There's also some gaps spread out all through here. Right here is another one. So a gapping market can be really hard on your stomach, and it's never a good idea to get involved in a gapping market. But a lot of these very high volume stocks have been gapping lately, and it's just something you have to pay attention to and be very careful with, especially if you're a short-term trader. If we take a look as we scan through here, this stock respected the 200-day moving average. It had some very high volatility days. In general, it respected the 20-day moving average, and this long period from March of 21 all the way over here to October 21, you can see this market essentially went sideways. We had this huge gap here from roughly 63 to 75 bucks, which is an enormous gap to the upside. But as you can see, it essentially went nowhere. The market, once it gapped, went sideways and then gapped right back down again from about 75 to 60. These are huge gaps for a stock with this kind of volume. This stock is an extremely high volume stock, right? Usually in the top 10 of the most actives here recently. So to have that kind of volume, to have those kind of gaps on a stock with this much volume is not only gut-wrenching, but kind of unusual. Today, Snap's trading at 36 million shares. It's the number 2 most active stock today as I do this video August 15th. So that's an enormous amount of gapping for a stock that's well traded with high volume. But now we can see here that around October of 2021, this stock gapped below the 200-day moving average and just essentially went into a bear market and just tanked. We went all the way from approximately 70 bucks all the way down here to where we are currently in the $12 range. Now, it's important to keep in mind that this stock trades in two distinct ways. It gaps and then it behaves normally. You can see a little gap up here, and then basically this is normal bear market trading, respecting the 20-day for the most part. Even respecting the 5-day, you can see that it came and stayed under the 5-day for a long period of time. So these are trading days, so this is a 2-week period of time where it stayed below that 5-day moving average. You could short this market and sleep at night and not really have to worry about it, especially the way it's respecting the 20-day moving average. So all of this is normal price action. What's not price action is this kind of craziness right here. You could see we had this huge gap to the downside and then an enormous gap to the upside. This is penny stock type behavior. Very disturbing if you're short-term trading, and if you're going to trade Snap, you have to keep an eye on that, because that will break you wide open, especially if you're using tight stops, both to the downside and to the long side, whether you're trading short or long. These are nerve-wracking types of gaps. Other than that, this market trades pretty conventionally for the use of moving averages. But I have to say again and emphasize, these gaps are not good if you're a short-term trader. I would stay away from this market if I was an overnight trader, say a 1-day or 2-day holding trader, because these gaps will bust you wide open. At worst case, they're going to give you a real serious problem with your stomach. At least it would for most people. But let's keep moving on. The stock went sideways, as we can obviously see here, from February until Aprilish. Again, beautiful respect of the 20-day moving average down. You could have shorted this market with very little problems. And even this gap to the downside, assuming you were short, wouldn't have bothered you because it's going in your direction. Gaps are never good, but if they're going in your direction, at least they're going to benefit you and not hurt you. What happened down here at the bottom is an extreme, just a dry up of activity. You can see the volatility collapsed. People have no idea what to do. This last exhaustion gap just beat any bull was just beaten up if they took positions here because they just got destroyed. So this activity here from approximately May of 2022 right up until the present is people trying, this is representative of people trying to desperately figure out what's going on with this stock. You can see in the last month or so, 3 weeks, the volatility is minuscule down here. And this is for a stock that's trading, today over 35 million shares. So this is indicative of people having no idea what's going on with this stock. Again, another gap from here to here, never a good sign to see a $5 gap on a stock that's traded this heavily. So from a technical perspective, using moving averages, we can say that this stock is still in a bear market. It's way below its 200-day moving average, which means it could continue down. As you can see, it has not respected the 200-day moving average in terms of bouncing or testing it. It stayed roughly the same distance all the way down. So the 200 is not helping us a whole lot right now. The 20 has gone flat, and the 5 is essentially now useless because the volatility is so low that the 5, as you can see, is almost a flat line. Moving averages in this particular case are not super helpful right here for the last, say, since June. So the last 2 or 3 months, they're not really helping us a whole lot. They would have definitely helped us to the downside, but right now, this stock is basically confused about, people are confused about what this stock's going to do, and they're being very cautious, essentially only trading if they have to. So what do I see for the stock? Right now, the honest truth of it is, there's no way to tell what this stock's going to do. My guess is because of the huge sell-off, it's probably not going to go much lower, but that's a total guess, and it has nothing to do with the technicals that I'm looking at. The reality of it is, I would stay out of this stock until it tells us what it's going to do. If we get a significant rally here, say up to 20, then we're probably going to go up to 30 and test the 200-day moving average. That would probably happen sometimes late September, and depending on where we are, the moving average may be down around 23-ish, 20, even $20, which would mean if you're at 11 or 12, we're trading today at $12.24. That means you might get a test from a $12, $13 area up to the $20 area. So there's some opportunity to make some money in this stock on the long side, but you really have to wait and see what goes on. Right this second, we're trading above the 20-day, and it looks like also, you can barely see it, where it looks like we're above the 5-day moving average is above the 20-day moving average, so that's normally a buy signal. But with this level of volatility, I wouldn't trust that at all at this moment. So I would wait and see if we get some movement here. Some confirmation that this is going to test the 200-day moving average before I took a position in this stock. Let's move down and see what RBAM Research does. RBAM Research has their own way of doing this with algorithms, and let's take a look and see what it says for Snap. We can look today. These prices are for today, and for Snap, they're putting no buy signals in here at all. So they're basically confirming what I talked about. You can see here down at the Smile Direct Club, they have some entry prices on a penny stock. They also, for CrowdStrike Holdings, have these. There's 194 of these listed here. Twitter's here at 43 bucks. These are the buy signals for today, all for entertainment purposes only, but they do list them. But for Snap, they don't list anything here today. Which is consistent with my analysis of the technical indicators on the moving averages. Let's take a look exactly what RBAM Research does. You can see they put out these entry signals every morning before 7 a.m. Monday through Friday. These are out for today, the 15th. They're buy-onlys for the stock. We don't do shorts at this time for stocks, but they're 1-day, 5-day, and 20-day hold. That basically means worst case you hold for 1 day, worst case 5 days, worst case 20 days, and it gives you the corresponding suggested entry prices here. These are just reference points. You should never use them in and of themselves. You should always back them up, or at least have your own ideas and use your own ideas and use these to back up your own analysis. The way this works is if you bought today, you would close at the end of 1 day. If you hadn't made a profit, you close it at a loss. Same thing for 5 days, same thing for a 20-day, and you would take your profits as soon as you got them. So if you bought today and made a profit, you'd take the profits. If you didn't take the profit, you'd close it out at the end of 1, 5, or 20-day holding period at a loss. And that's the way this works. You can get all of these for free. They're available every morning, Monday through Friday, before 7 a.m. for 190 stocks. For the major forex pairs, for BTC crypto, And for the most liquid futures, no credit card required, absolutely free. You can get them all by going to rbamresearch.com and just signing up. There's a link in the description below, and if you like this video, please click the like button. If you want to subscribe, please do that. Please leave a comment, tell us what we can do better, and everything you've seen here, including all my comments and the entry prices, are for entertainment purposes only, and you definitely trade at your own risk.